journey and your last two. I sweet med tea when they turned in. The styron down to mute. And can land a pole that sunk he died.
Before we can calculate any RDTOH transfers or Part 4 tax amounts, we first need to understand the corporate group structure. This is always the first step in any multi-corporation tax problem. You cannot calculate the allocation until you know who owns whom. At the top of the structure is Raj, the individual shareholder. Raj owns holdco, which serves as the parent corporation for the group. Holdco then owns interests in several different corporations. First, Holdco owns 100% of OpCo, because Holdco owns all of OpCo. This is the simplest ownership relationship in the group. Next, Holdco owns 75% of MefGeco, the manufacturing corporation. Holdco does not own the entire company, but it still has a significant ownership interest. Holdco also owns 20% of Finco, the finance corporation. Finally, Holdco owns 65% of PropCo, the property corporation. Notice that each corporation has a different ownership percentage, and that difference is going to become extremely important when we begin allocating refundable tax benefits. On the right side of the slide, you'll see the connected corporation checklist. For purposes of this example, all of these corporations are treated as connected corporations. That means the special rules involving dividend refunds, Part 4 tax, and RDTOH allocations may apply when dividends move between these entities. Now look at the ownership percentages shown throughout the structure. OpCo is 100% owned. MefGeco is 75% owned. PropCo is 65% owned, and Finco is 20% owned. These percentages are not just ownership statistics. They are the foundation of the entire calculation process. The amount of refundable tax that can flow through the group depends on these ownership interests. That's why the pie charts at the bottom of the slide are so important. Each ownership percentage represents a different economic interest in the underlying corporation. And because ownership differs, the amount of refundable tax benefit that Holdco can inherit may also differ. This is the key concept that separates simple Holdco-OpCo examples from more advanced corporate group calculations. In the simple examples we studied earlier, ownership was 100%. So the entire refundable tax balance moved freely through the group. But once multiple corporations and different ownership percentages are introduced, allocation becomes necessary. The memory rule for this slide is simple. Before calculating tax, first identify ownership. Ownership is the foundation of allocation. Every calculation in the next step will be based on the ownership percentages shown in this corporate structure. Once we understand the group and the ownership relationships, we can begin calculating exactly how much refundable tax is allocated to Holdco from each connected corporation. Now that we've identified the ownership structure of the corporate group, we can calculate how much refundable tax is allocated to Holdco from each connected corporation. This is where the ownership percentages become important. At the top of the slide, we can see the dividend refunds generated by each corporation. OpCo generated a dividend refund of $10,000. MefGeco generated a dividend refund of $8,000. Finco generated a dividend refund of $5,000. And PropCo generated a dividend refund of $4,000. If every corporation were 100% owned, Holdco would simply inherit the entire refundable tax amount from each company. But that's not the situation here. Each corporation has a different ownership percentage. As a result, Holdco generally inherits only its ownership share of the refundable tax benefit. Let's calculate each allocation. Starting with OpCo. Holdco owns 100% of OpCo. So Holdco receives 100% of the $10,000 dividend refund. That gives holdco $10,000 of allocated Part 4 tax. Next, MEFGECO. Holdco owns 75% of MEFGECO. The dividend refund is $8,000. 75% of $8,000 equals $6,000. So holdco receives $6,000 of allocated Part 4 tax from MEFGECO. Now let's look at FinCo. Holdco owns 20% of FinCo. The dividend refund is $5,000. 20% of $5,000 equals $1,000. Therefore, holdco inherits $1,000 of refundable tax from FinCo. Finally, PropCo. Holdco owns 65% of PropCo. The dividend refund is $4,000. 65% of $4,000 equals $2,600. That amount becomes holdco's allocated Part 4 tax from PropCo. Once all four allocations are calculated, we simply add them together. $10,000 from OpCo, $6,000 from MEFGECO, $1,000 from FinCo, and $2,600 from PropCo. The total Part 4 tax allocated to holdco is $19,600. The conveyor system in the center of the slide illustrates exactly what's happening. Each corporation places its dividend refund onto the allocation process. The ownership percentage acts like a filter. Only the portion corresponding to holdco's ownership interest flows through and becomes holdco's allocated refundable tax amount. This is the key formula shown at the bottom of the slide. Dividend refund multiplied by ownership percentage equals Part 4 tax allocated to holdco. That formula is the foundation of every allocation calculation involving multiple connected corporations. The memory rule is simple. Holdco generally inherits only its ownership share of the refundable tax, not the entire refund, not an arbitrary amount, only the portion supported by its ownership interest. This ownership-based approach is what allows CRA to allocate refundable tax fairly across complex corporate groups while preserving tax integration and preventing over-allocation of tax benefits. Now let's bring everything together and see the complete RDTOH flow within a corporate group. This slide combines all of the concepts we've learned so far into one complete picture. At the top of the diagram, we have four connected corporations. OpCo generates a dividend refund of $10,000. MEFGECO generates a dividend refund of $8,000. FinCo generates a dividend refund of $5,000. And PropCo generates a dividend refund of $4,000. However, holdco does not automatically inherit all of those refundable tax amounts. Each corporation has a different ownership percentage. Those ownership percentages determine how much of each refundable tax benefit can flow to holdco. Think of the funnel in the center of the slide as an allocation mechanism. Each subsidiary contributes refundable tax into the funnel, but only the portion supported by holdco's ownership interest is allowed to flow through. After applying the ownership percentages, holdco accumulates a total Part 4 tax amount of $19,600, and that amount creates a new RDTOH balance inside holdco. This is the key transition. The refundable tax generated throughout the corporate group is consolidated into holdco through the ownership-based allocation process. Notice the vault in the center of the slide. The Part 4 tax of $19,600 becomes holdco's RDTOH balance. The refundable tax has not disappeared. It has simply moved from the subsidiary corporations into holdco. Now let's follow the flow to the shareholder level. Eventually, holdco pays a dividend to Raj, the individual shareholder. When that dividend is paid, holdco becomes eligible for a dividend refund. As a result, CRA returns the refundable tax that had been stored inside holdco's RDTOH account. This completes the journey. The pipeline at the bottom of the slide illustrates the entire process. The subsidiaries generate refundable tax. Ownership percentages determine how much of that tax can be allocated. Holdco receives the allocated amount through Part 4 tax. Holdco creates an RDTOH balance. And ultimately, the refundable tax is recovered when dividends are paid to the shareholder. The panel on the left summarizes CRA's objectives. First, ownership-based allocation. Second, fair tax benefits for each owner. And third, no double counting of refundable tax. Those three goals are the reason the allocation rules exist. The final result shown on the right side of the slide captures the most important lesson of the entire chapter. Refundable tax never disappears. It is allocated, it is tracked, and it moves through the corporate structure according to ownership interests. The golden memory route provides a simple sequence to remember. Dividend refunds are generated. Ownership percentages are applied. Part 4 tax is allocated. RDTOH is created in Holdco. Dividends are paid to shareholders. And refundable taxes are ultimately recovered. If you remember that sequence, you understand the complete flow of refundable tax within a corporate group. And that is the central concept behind RDTOH calculations involving multiple connected corporations. Ownership determines allocation. Allocation creates Part 4 tax. Part 4 tax creates RDTOH. And RDTOH eventually produces a dividend refund when profits reach the shareholder level.